Hey everybody, welcome back. Well, a lot to go over. S&P obviously hitting another new high today on the futures market. We can see this getting tighter and tighter. What I really like about this particular pattern is that all of a sudden we're filling in those wicks. I look at wicks as price rejection. We have retail sales to go over. We have a ton of data to go over that's supposed to come out tomorrow as well. And you're going to see really quickly why you need to be watching the macro and the econ data that's coming out right now and why it's driving the market. But Doji fills in the doji, and then what happens from there? It just continues to lift. Is this really the story? No, it's small caps, and we're getting there. But I think it's really important to just focus on this, and then we're going to look at relative performance, and then we need to talk sector. We have to talk sector and what's going on. This is a control bar. That's how I view the world. These bars, when they have these outsized moves, and you can always tell the outsized moved because all you have to do is look at your ATR, whether you're using your own settings or just general settings of ATR. Whenever you see something that's 2 times ATR and it's pretty wicked, and that's pretty wicked. I mean, they tend to mark highs for a period of time. You can see these all over the place. It doesn't really matter. If you go and take a look at something like even gold, you can see back here that this marked the high for months. And it doesn't mean that it's going to stay that way, but it's just important to understand the concept. When you have something like this, it takes a while to work it off. Now, what's crazy about all this is they are just buying the living heck out of gold right now. So that's definitely something for us to talk about at a later date. I don't think it's that pertinent right now. I don't know what type of value I'm really adding by pointing at gold and saying it's going higher. I think the rotation's way more important. And I think the data that came out is more important because that's going to talk about why this moved the way it did, meaning sideways, and why this is just absolutely going to continue to explode. And I think it's really important that you pay attention to those words, going to continue to explode. We've been talking about this since Thursday. Have you been paying attention? We started talking about it Thursday in the pre-market. We talked about it in Saturday's video, yesterday's video. We've been talking about this rotation over and over and over again. To the point with actually on Saturday's video, I always put out a video on Saturdays and people said that I was talking about hyperbole. I guess they don't feel that way anymore. But you can see the breakout here. And once you understand why this is happening, it gets really clear. So I'm going to do a recap of that as well. I want to show you a system or a process is a better way of saying it that can work really well when stocks are in free fall and you're trying to see if they're bottoming. It's a real quick trick that you can do and you can pick it off yourself. And then we have to talk about tomorrow's data for home builders after today's data for home builders and retail sales. But I think it's really important to say this is probably just not going to go away. And I'm going to show you one reason why. So in front of you is a relative performance chart. You can see from the 11th to here just the outperformance of the IWM versus the SPY. And these are really good relative ways of looking at the market. And what you're doing is just getting a relative sense of it. So IWM versus the SPY, if you went long IWM and shorted the SPY since this date and time, at the specific time, you're up 9.75%. And you'd say, oh, well, that's great. Now, here's where it gets interesting from my perspective. What you're looking for always is you're looking for some kind of median, meaning show me where the median would be on something like this. So if I was to take the existence, and we're going to go back 25 years, 24 years, and what we're going to do is we're going to look at IWM versus the SPY. Now, where this gets interesting is you just take a demarcation line and you drop it down something like that and say, okay, well, where's the 50% line? And that would be average. Or you take something like this and just drop like a VWAP there. And where is the average volume weighted of the differential between those two lines? You're going to obviously get completely different readings between where the volume is for that period of time over 25 years and where the average price would be, meaning relative performance average is usually around there, which is not really surprising, right? But this is an extreme reading. This is not an extreme reading. This would be average. What's interesting about this is when you tell somebody that this performance could just go back to average and that would be 22%, and then say something along the lines, well, that's not even possible. You know, that's impossible to think that IWM could outperform the SPY like that. Yeah, you were just there February 23 on that relative performance basis. So what you're seeing is completely and utterly abnormal, right? It is not normal, hence the word abnormal. And so you're going to see some kind of reversion to a mean. Now, there's a couple different ways to look at how you can revert to a mean. And instead of just going to just showing you fib levels, if we took something like this and you throw bands on it, and you looked at this from a band standpoint, what you'll notice is that you got to the point literally on this where you had a third standard deviation. You were so out of whack right here. And this happened in June, and now you've reverted back short term to the mean. Does this mean that you're going to keep going or pushing and then work your way up? I don't know, but this is a really good short-term way of looking at it. And what this would mean today is that you've reverted back to the mean, at least in the short term. because now you're back to that median line from that third standard deviation. Remember how Bollinger Bands work. First standard deviation is about a 67% chance of staying in that range. Second's 95, third is 99.7. So when you get to that third, there's like a 0.3% chance you're going to pop out of it. And very rarely, if you look at this chart over 25 years, you're ever going to see anything relative like that. Really important distinction. Now, the longer term way to do this is a reversion. And by looking at a true reversion, I would just use fib levels. I think that's a really easy way to do it. And then you would just say, geez, does that ever work? Well, there's a 61.8% retracement line that's worked pretty well over time. The 38.2 has worked pretty well over the past 25 years. So you would say then, okay, where is a reasonable target for this outperformance to continue before it might run into some problems? And you'd have to start with the first fib level, I think. I think that that is pretty realistic. So have we seen the easy money bounce on this? I do. I do think you can see outperformance on specific names. You're seeing it after hours on one name, but that would give you really another 3% or another day of what we'll refer to umph, what you're seeing right now. I think that when you got to something like this and you saw another 3% day of outperformance, and I want to phrase it like that. I don't want to just say when the RTY goes here, because I don't think that's what this is. This is a huge macro issue. And remember how I view the world. Everything that is happening right now is macro. Yep, I'm bringing back the stool by a huge demand. This was the most comments I ever got on any stool that I've ever used to explain this. So I guess this is going to be the stool. Comment below if you want a different stool. But this is how I view our trading in the world. And then we have the macro side, which tells us what's happening, and then will tell us who's affected by that, and technicals will tell us when we should get involved. So in other words, this is our trading platform. Sometimes when you're at a bar or a restaurant and you're having a nice mozzarella stick, I guess that's what the kids eat these days, you're going to lean on the front leg, you might lean on the side, you might lean on the back. So they're all needed to hold the stool up, right? But at the same time, sometimes one's going to carry more weight than the other. Right now, it's all about interest rates, and interest rates. And with the data that came out, it is very clear of one thing. They're going to cut rates. It's actually at the point, I'll go over this on Saturday, I'll link Saturday's video, but it's at the point of not only are they going to cut rates, but now we're getting to the point of how much are they going to cut rates. Some people think that it's going to be way steeper than expected, and there's some validity to that. So when we understand that, we can understand why this is moving, and then we can understand why it could continue to move. But first, let's take a look at some econ. All right, so what we would do is we would just get into something like this and go Tuesday, July 16th. Okay, retail sales, export prices, retail sales. What happened today? Well, actual was in line. Exports down, all right, imports flat. Retail ex autos, they were up. Export year over year, I mean, these were non-events. But the market really moved. It actually seemed to me year over year was down a little bit, but it actually seemed like it was just relieved that the news was over. Matter of fact, when we start looking technically at the chart, you'll see that the biggest real event was this 11:30. Once again, a bond auction of all things, which is why I constantly tell people, especially lately, there are times to ignore the bond auction. And then when we have 30 trillion in debt, there are times to pay attention to the bond auction and how well it is received, and if there are buyers or sellers, because obviously there is more debt, and that affects the macro greater, right? If you have less debt, then it's going to affect it this much. If you have more debt, it's going to affect it that much, right? You have the difference there between the interest rates. Therefore, the need to watch this is significantly greater now. Just a little tidbit on why it's so important. But for tomorrow, you have mortgage applications, mortgage market, refi, purchase, permits, building permits, housing starts. Tomorrow, if you thought home builders have been crazy, imagine if some of this comes in bad tomorrow. And that's something that you have to think about. And it's actually one of the reasons why I trimmed a bunch of that stuff today and get into it later. But then it keeps going through. You have another Fed speaker. One guy will tell you how great things are. The other one will tell you how bad things are. But again, what we care about is what are they doing with their money? So you have the short end at 17 weeks, and then they're going to buy something on the 20-year maybe. So we're going to want to watch the 20-year. Once we do this, hold on, let's clean that off so that you can see that clearer. Once we do this, we have a better understanding of where we were today, what moved the market, which was really a big number, big weighted number, but it was a non-event in my opinion because it really didn't move the needle. Now, once again, if we go and take a look, well, what was the biggest idea of the day and what really moved the needle? Well, I might argue that it was the bond market. And then someone would say, well, the market didn't really move from that point on. And then you would just go here and go, well, that is where we just kind of closed on the S&P. It kind of locked in the pricing of the S&P. It also shows that we had buying all day from there, and the dollar kind of went flat. So maybe a better idea would be to just pop in IWM and see how did IWM act from that time and see if there's any differentiation there. And then you can see IWM from that time, it was basically marking the low of the day. So you go there and mark it, you have the undercut here, and then it literally never looked back from there. And what we're starting to see what's happening with the S&P here, see what's happening with the dollar, stay with me. So what you would do here, I'm gonna have to change this out to the T and X for a second, and we're not gonna have time to edit this, but watch what's happening here. And I think this is, well, I think it's fascinating, but let's leave in the IWM that way. We're gonna take out the SPY, and we'll take out the T and X this way, and watch what's happening. So if we go to this 11:30 time frame, now we've always had a period of time where the IWM was always affected by the bond market. But I would argue that it's starting to become more affected by the bond market than any other index. And that was not always the case. It did used to be the high beta stuff, and that's not the case anymore. And this is really important. Wait till we get into the sectors and you start looking at the movement in sectors. So I would suggest that when you're watching the bond market, as before when we would talk about watching the S&P, I would strongly suggest in this particular period of time, you start watching IWM along with it. So if you were looking for that tidbit to take with you today, you just got it. Start focusing on this, start paying attention to this and seeing how it's going to play out. And of course, we know that the IWM outperformed today, and we were just talking about how this could continue for some time. But again, are we going to have that little blip right there that I just showed on the fib levels? I don't have a clue yet. There are some signs that this could continue, but I don't see that you're going to be getting, we'll get to that. I don't see how the sectors can do this every single day, but we'll get to that in a moment. So what we're seeing right now here is that this is the 11:30 time frame. We hardly move. You were up maybe 9 basis points, 8 or 9 basis points. You were up maybe 10, 15 basis points here, where what happened here since that time? So we were to mark this time off and we go and take a look at it. Well, you're up another 1.25 there. I think that's an important distinction, guys. I wouldn't sleep on it. Now, another concept we really must hammer home here is going to be what's going on with the Russell and the indexes. So what we're going to do is just look at the 1 minute first before we start drilling into this and then start really tearing it apart. But look at what's going on here. And you can go and just Google these yourself and see that, housing construction ITB or PBW, and go and take a look at seeing that you're seeing the solar names move, which they are. And then are certain retail names moving? Is the IWM going up? Gold's going up, which is kind of crazy to me. Block is moving, which is obviously all the crypto names. They are moving as well. But you're really seeing the industrials continue to move, and we should talk about a couple reasons why this is happening. But before we get into all that, take a look at where your leaders are out of 40 different sectors. This is what's moving today. What are they selling? They're selling the low end right down here. They're selling the SOX. They're selling XLC. They're selling IGV. They are rotating into regional banks. They are rotating into the home builders. They're continuing to do this. It's funny, I think in the community, they're sick of me saying it, but I keep saying regionals, REITs, home builders, biotech. You can see it coming, and you can see all that money rotating into it. And I think that's an important distinction. But another way of looking at it, besides this graph with 39 different sectors, all you do before you get into the individual names is then just go to the heat map. And one of the things I showed on this heat map was one way that I use it that I find very effective. So you'd use the S&P 500 here, and you can do this with any heat map. Instead of market cap, what you do is go to daily volume, because you already know who the big dogs are. You really don't care why they're in or why, who's got the biggest market cap. You care who the money is, right? Or where the money is. So then you go here and you start sorting and going, okay, well, what are we saying? A couple of outliers, but let's get rid of something like this for a moment and say, okay, I just want the 3% or close to 3%, and that's what they're going to give you. And what are you getting here? Okay, well, you're certainly not getting tech, are you? You're getting all the banks. Look at all your regional banks and how they're just lifting. PNC up 4, regional up 3.5, Wells Fargo 4, Citigroup, Key. I mean, this is what you're getting right now, and I think that's really important. All these banks are lifting, and Bank of America up 5% today. And this is telling you something else. It's actually going to segue very nicely into where we're seeing some of the sectors that are lifting. People don't understand why you're seeing CCL and CLH lift. Obviously, Starbucks has earnings soon, so that's why they're lifting. But why are we seeing these names lift? Well, you're seeing these names lift because oil is predicted to actually come down. Energy price is supposed to drop. OIH is actually moving, and the reason for that obviously is because of what's happening in the US recently. But more importantly, what else is really moving here? Okay, well, you're starting to see some of the solar names moving, where we just saw that from the sectors. but now you have BA moving, and that's going to segue us into some other things. You can also just go here and just flip the script and hit 3 and go, where's the blood? And then you can see that it's in anything that's missing earnings or Progressive or the Raymond James of the world, the Schwab, which everybody had to be in yesterday. And then where are you really seeing the selling? Now, if I make this just a 2, I think it's really important to just note that it's SMCI, which had very good news today. It's Micron bleeding before ASML, even though there was really good news on DRAM pricing, software, and then you're seeing it on the IPP side, which is supposed to be feeding the data centers. And then, of course, you have NVIDIA. And this is all based upon volume. This is not based upon market cap. If I switch to market cap, you're going to get a different group. I'm not interested in that. I want to see where the volume is. That's what I care about. I don't want to look at something just because it's big. I want to go to where the action is, and that's why I use volume. And you can actually change this by the hour if you want to see something comes on or off within an hour, which can be helpful. And you can even do it pre and post, as I pointed out before. You can even do it by relative volume and just say, show me the names that are in the S&P that are trading 3x relative volume today, which is what I did. And then you can see where the money was. These are the names that were 3x. And of course, you're going to find events around there. But it's a great little tool to sort. You can even go who's trading on the under volume side. You can see it's semiconductors. There's really no big bid out there on semis. You have half your average relative volume on Intel, 75% on Apple, 73% on AMD, 50% on AVGO. So that leads you to another question too when you do this. And I don't want to spend too much time on this because we have a lot to go over. But then you would say, well, are they really selling Apple? Are they really selling AMD? Are they really selling AVGO? Or do we just have lack of buying ahead of ASML's earnings? And that's a really good question. It's a question we're not going to answer this evening, but it would deserve an answer. And the only way you're going to get that answer is by continuing to watch what happens with those particular names. So what you really did there was you got some more data, you looked at your macro, then you drilled into your indexes. And then after your indexes, what you do is go look at your sectors, which we did, and then you would go look at your individual names. And it wouldn't surprise you to see that Dell is selling down this way. It wouldn't surprise you to see that SMCI is selling down that way. But you would know now that that's on light volume. AMD selling down that way, but again, light volume. I just don't think anybody wants to be in these names ahead of ASML this evening. ASML will come out tonight, and when they do, you'll see this do very, very well. Obviously, one way or another. By very well, I mean very volatile. It's a much better, much cleaner way to say it. Look, everyone has high expectations for this. If it doesn't meet it, we're going to find out early in the morning because they're based in the Netherlands. One company that did pre-announce and then beat the pre-announcement was AEHR, and we saw this. We actually had a position in this, and the community did really nicely with it. I actually bought it today because this actually was very silly to me that it wasn't up more. And you could see them start to position themselves. So they pre-announced here. Stock trades up, and then as soon as it started breaking out, I just got back in it and like, this is silly. You're at the same level if there's a pre-announcement, and you know that they're going to raise guidance. I mean, if you know anything about fundamental analysis, you know they're going to raise guidance on the call. You just know it, right? And you know the call is going to be great, or if the call is not going to be great and earnings are not going to be great and guidance is not going to be great, you know what you don't do? You don't pre-announce. So like this, this wasn't rocket science, but it was a nice way to just pull $3 out of the market pretty quickly. And you can just see after hours, again, pretty simple trade, but you just have to be in before the news. And I guess this is just lack of inexperience. It's so fascinating to me because we have more information now than we've ever had, but I don't think that people know what to do with the information that they're getting. I almost feel like it's information overload because to me, this would have been up substantially more if it wasn't that way before the call, and then it might have actually come down, but it was hardly up on that news, and you can see the follow through right there. So I think that's really important, but that was a really simple trade. I do want to get into some of these names that we've been trading and talking about for the past couple days, names like, let's get into it. Not that one. Let's do this. Let's do it this way. I was going to do them all at once, but we're not going to do it that way. So names like Nail, like you have the home builder data coming out tomorrow. This could be a bloodbath. I had positions in this. I had positions in DPST, TNA, LABU. I cut a bunch of these today, just disclosure, and I'll get into it. But when I start getting to that third standard deviation and everybody thinks they got the trade figured out, look, this is a 3X bull ETF, and it is tied towards the home builders, which are ripping, and they should be ripping. But when the home builders are breaking out like that, and we're seeing 5.5%, 6% moves on a daily basis, you have to think that that's probably not realistic, right? You're probably going to have to give some back. And when you do, you want to be in a position to take advantage of that. Therefore, it's not something that I'm going to just rush into right away. You're going to revert, right? You always have these reversions. And what you want to do is you want to be set up for them. Home builders like this, like the 3X, this stuff ends in tears, guys. Like, you think you're great, you think things are good, and then all of a sudden you get a sideways bar, you get the pop up, you're like, oh, I know I shouldn't have sold, and then wham, you know, no hopes and dreams, they're all gone, and now you're trying to eat a hot pocket. So you got to get out of this stuff when the getting's good. Believe me, I see it. It looks beautiful, but third standard deviation bands, do you really want to buy into them? Historically, if you do that, it's not usually the best idea. I would rather sell into them and then just miss and give it some time to reset back up. I don't need the last dollar, but when you're buying these things in like the 80s and you're coming in and they're at 102, you're not getting into these now. You want to get out of them. There are very specific names that I'm going to continue to own in this space. And I would tell you to look at all the financials. I mean, they look really good. And a lot of the home builders, I don't know which ones are going to come down the most or how you're going to regress here. But remember, with 3X ETF funds, even things like this, they could just fall down. But you could go sideways and those funds could bleed out. Everyone should know that about 3X ETF funds because of their expense ratios. They're really expensive. So you can go sideways. That's why when you look at something like a XHB and you see something like that hitting a high, let's get rid of this for a second. This is probably a really good segue. Someone will say to me that's not the exact same thing. And the answer is, yeah, I know. But my point being is if you look at the all-time high here on XHB, and then you look at that, and we're hitting all-time highs, and look where Nail is, that's the expense ratio that's primarily responsible for that. And just off of that period of time from March on, it took away 30% of profit, right? So just understand that. There's a lot to that. We could spend more time on it. And you can see that here with XBI as well, where you can see how XBI is going to do. And then if I took, instead of that, what we would do, well, let's just do it. We'll take LABU and you'll see. And I'll get rid of now, and you'll see this, look, but wait, there's more. So you can see right here how all of a sudden you're back to the highs and you're nowhere near it, right? You're at 129, you gave up 40%, and it's from February. It's a 40% difference. It's a big deal. So you always be aware of that. That's why I always tell people, depending upon how long or short term you want to be, the vehicle that you're in, it does matter. And again, these things are going to regress. Like, here's a great example of this. So NVIDIA today, I had one trade that did not work, believe that or not. I know, it's the internet. You think everything works on the internet, all the trades, but it's just really not the case. So we went on the premise, or I should rephrase that. I went on the premise that, you know what, we've held this 10 times, and that seems pretty realistic. So if we held here 10 times, surely we're going to hold there again. And in my best Morgan Freeman voice, that is not what happened. Today was the day it finally broke, rallies, breaks, and then I get out of it. I think it cost me like $1. And it just gave me a really great entry. And the entry was right around here. And it was a pretty textbook entry off of RSI. I'm going to show you it live in a second here. But the important thing about this is when you know why you're in that trade, if it's a day trade or a swing trade or why you're buying, it presents an opportunity. So we were able to get in down here. And at one point, we're up like $2 on the day trade. You're going to get opportunities like that in the TNAs of the world. They're coming. You're going to have to bide your time. You have to think about it this way. You have to think about, where am I in the food chain? So before I get into the NVIDIA trade, I'm going to forget this because there's so much I want to get out to you guys so you're prepped for tomorrow. But you have to think about where you are in the food chain. So if you're just catching on to the TNA trade now, okay, you have to realize that you're 4 days behind. Someone caught it here. So you're 4 days behind. So when you're in something like NVIDIA, right, and you're selling down here, and here you are, right? And you're like everybody else, and you're selling into the panic. Where are you on the food chain? See, the food chain, it could be on a day trade, it could be on a swing trade, on a long-term trade. Like, what do you know here that you're selling that someone here didn't know, right? They knew more here than I knew, right? But I might know more here than they know now. Hopefully that makes sense. Here, watch this live.
We're going to have to step in something here. We're not going to have a choice but to try it and then just risk the capital. And if it's right, it's right. If it's wrong, it's wrong. Because by the time you bounce, I'm not going to be around. I'm not going to have the opportunity. Buying NVIDIA here. Buying NVIDIA. I bought stock. I'm up in the stock. Low day stop with no intent of selling them. I just don't think that you're going to be completely out of this thing ahead of earnings. I can get stopped out of this whole thing again. You can 100% have, but to me, it's worth the risk here. Oh, the video is working. That's nice. So if I was day trading that the video, then right there would be where you would pull something out of it. Into this is where you'd pull something out if you're day trading it. Right into it. You wouldn't even think about it. Like into this when everyone's like cheering. This was super simple as to what we did. We stayed out of the way. We didn't tell the market what it was going to do. We drew our levels, and then all we did was just wait. And so you could see the consolidation here, and you're looking for the trigger here. And I mean, it doesn't really get more obvious than that, does it? Right? You're consolidate, 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 and then boom. And I don't know that it's going to work. I could get stopped out, but it seems like a nice spot to try. So this presented an opportunity. It was nice. We made money on it. Candidly, it paled in comparison to what we did today with these kinds of trades with the nail and how they're doing. I would watch these for sell-off tomorrow. If you see sell-offs in these kinds of names tomorrow, I would take a look at them for opportunities for trades. I do really think that the very easy money, we went over these on Saturday as well for you guys, but I do think that the easy money has been made. Now, are there other little pockets that you could be looking at? I do. I think that there are little pockets. Affirm was something we bought the other day, and we actually talked about that in the pre-market live. If you can't make the pre-market lives, they start around 8:15. The people that attend those are laughing right now because it's mostly more like 8:15. But again, we bought this like in the community, but we went over this publicly in the video that, like, look, these names, they're going to move because of the interest rate sensitivity of their product. And that's exactly what's happening. So I don't foresee this macro shift changing. And tomorrow we'll get into the other shift that I'm starting to see in industrials and why that's probably not going to change. But for tonight, that is it.